JB here, JB. Hope everyone's doing outstanding. 3:19 on this fine Monday afternoon, March 31st. Last trading session of March, last trading session of quarter one. Who knows if we get some end of day shenanigans, window dressing? I don't think so, but looked like a bloodbath was incoming this morning, and markets reversed course. I was sitting there watching in the morning. We're down. We broke 558. Excuse me, 552, then 551, then 548. And then you start looking, then we got all the way down to 546, around 940, 946. And then you were, my fear, the 540 handle, that's like a big spot for me. I think if that breaks, then you got to start thinking the bear market probably is coming, whether, regardless of what all the other headlines and catalysts, all that's fun stuff. But markets found a bid. We got back over 550 by 10 o'clock, and then it's been a little chop into the afternoon. Then 2 o'clock, buyers came in, and boom, all the way up to 558 and change. S&P is now up 0.5%. So a welcome respite into Wednesday's uh, Liberation Day, Tariff Day, whatever it's going to be called. I think right now it's like almost like Nvidia earnings, so much hype. Um, I I think it's like everywhere, even over the weekend. I tried not to read too much stuff because everything was skewed negative in regards to the tariffs. And I mean, if you look at them and at face value, yeah, I mean, this is not good stuff, right? But uh, there's other stuff. No one knows 100% the impacts, and we'll see how this all plays out. To me, and I keep looking at that VIX, which is almost flat as a pancake right now. It was up over like 14% this morning. To me, that's like the market's fear, right? That's, to me, the seeing it where it is now kind of means that maybe there's a possibility that there's a little relief coming. I put it on the watch this morning. It's kind of funny. You always, when you were a little kid, right? You always heard about March and April, or at least in the Northeast because of the weather. March typically came in like a lion and came out like a lamb, right? Then you have April showers bring May flowers. That's kind of how those seasons went. And here it is, ironically enough, we're at the end of March, which is a lion. The market has been rough. Uh, Pretty much all the way since the end of February into March, and now we're heading into April. So, uh, I keep saying this over the last couple of months. I don't have my bull or bear suit on. Normally, I just say I don't have my bear suit on, right? But I'm going both ways. I mean, it would be nice right now. So you take a look at the S&P and the SPY. You have that bear flag set up, right? So the concern would be the breakdown, and we got the breakdown today. You would typically that would mean that there's more downside coming, and you take the mast of the flag and you divide it in half, and that gets you another $30 from 610 down to 550. So then you take that and you say, okay, we're down, goes down. That's pretty much not guaranteed, but that's the next target, be 520, and somewhat negated this morning. And now the second part of negating this bear flag would be if we break the upward resistance around 578. Would have to do that rather quickly. But still, otherwise it might be 581, 582 as the days progress. But that would be one concern. And then you're going to have the other side, right? People are going to talk about this possibility of an inverse head and shoulders, right? We have a bounce here, we go up, then we dip a little, but just not lower than the previous lows, and then we bounce, and now you have inverse head and shoulders. So I mean, you can look at it with your bull goggles, you can look at it with bear goggles on. For now, I just continue to rely on support resistance lines I've had up. That would be nice to see us back. 563 would be an awesome spot to close. I was hoping Friday would be it. Maybe we get it today. We still have some time here. I don't know if we'll rally another five on the SPY. Maybe tomorrow, and then we'll see. We have I think the JOLTS report is tomorrow, so some of this data is going to become a little bit more important, especially as we head into April, and we'll start getting some data with that encompasses some of the possible fears and some of the repercussions of folks worrying what's going to happen when tariffs really start to ramp up. So that'll be that. And then, obviously we have Wednesday, and then we have the jobs report on Friday, which I expected the February jobs report to be a doozy, and it was actually not that bad. So now you look at this one, you would have to think the expectations for the jobs report on Friday is not going to be not going to be high. So I think again, there leaves room for surprises. So that's kind of the overall market. I was sitting there this morning, and I put on a watch list. I was probably, if I did have to get a hedge, I was going to get SQQQQ calls. I don't know if I'm saying too many Qs there, or the TZA calls. And it was 40, then it was 40, 41. It was getting close to 41. I almost went and got some calls, And then you look here, it's almost flat down to 38. It hit 41.20 at 9:40, 9:35. So thankful I just kind of sat on my hands. It's not easy to do, right? I mean, in the midst of the market pulling back, the easiest, it's almost like it's like, oh, here we go. And the instant the market gets you into getting the puts is that's when it reverses, right? Uh, so I was looking at that, and thankfully I just sat on my hands. And then as we started finding some footing, some of the names that I've been trading for bounces over the last couple months came to mind. And I saw Shopify, and you take a look at Shop. I mean, again, I think a lot of it's overblown. It had great earnings. I don't know how much of a tariff sensitive name it should be, but it's trading like one. So I think there was great opportunity for a bounce. Got those calls, and why don't I have this here? Oh, here it is. It was under $90 this morning, and then it started to reverse 91, 92, 93, 94. And then once it started breaking over 94, I took some of my calls off for 100% to cover costs, and I'll ride the rest. Have plenty of time. I'm not going to rule out that we have some other pullback tomorrow or another gap down, but at least I'm riding free, no emotion, and then have the opportunity to take advantage of more upside. And if we do reverse, I can get some hedge puts. So still like this one. I mean, if we get some mojo and some follow through tomorrow, I mean, I think it trade back over 100 very quickly. So that was kind of thought process there. And then I've been talking about getting some more Baidu, the 50-day moving average there, right at 91.50. It starts reverse course in the morning. I went and got some strikes there as well, some weeklies. I was actually looking for more next week. The weeklies look inexpensive on a risk reward basis. Asian markets were sold off overnight. So if those start to rebound and we have a bounce tomorrow, I can see it trading above 95 plus. And if that happens, those calls will at least be a double or triple. And then I'll lock some in, cover cost, ride the rest. But again, just small plays, right? I'm not going all in. I'm not loading the boat. I don't this like not the environment. I mean, it is the environment for if you're a pure gambler and you want to play puts or calls and pick a direction and hope there's follow through. These are some of the times where it could be if we get a 2 or 3 day rally, some of these calls, especially the speculative ones that are way out on money, may pay off many, many times over. On the flip side, we could be up 0.5% right now. We have 30 minutes to the close. We can close red, gap down again tomorrow, back to that bear flag situation. So again, keeping things small. When I get a chance to close them out to cover costs, I do that, and then ride the rest. Some other names I was looking at, Netflix this morning. Netflix was on the watch list. I kind of on and off for the last couple of weeks, looking to possibly add some strikes. All the way down to 9:20. I think it was 9:33, 9:20, 9:33. Yeah, Friday. And then I thought, oh, some great press over the weekend. A lot of their new shows that are coming out, some content getting rave reviews. You have to think it's going to continue to bode well for them, especially they're one of the first names that'll report Q1 earnings in a couple weeks. So I thought it was a nice bounce play. And another name similar to Shop, like not as tariff sensitive, at least for now, right? If we fall into recession, people have to start cutting back on discretionary spending. Of course, here's a name that might take it on the chin. I was actually looking at the calls all the way up to 1,000, over $1 at the open. Then I was looking later in the morning, and they were like 60 cents. And then I passed. And then sure enough, let me see what they were, just 90 by 95 earlier. I don't even want to see what those thousands are now. Yeah, they're $1 by $1.08. So I'll probably pass. But if it goes up to 950 tomorrow, those thousands will be $2. So I'll see if I revisit that one. Also, you take a look today. Look at some of the names that are rallying. Domino's Pizza, right? So if discretionary names are some names that might get hit from recession are going to come under pressure, at least the market's kind of like saying, oh, it's not going to happen yet. So some of these casual dining names. What else was I looking at? I mean, Restoration Hardware's back in the green. Well, Apple had a positive note this morning, so that's helping. Home Depot up 2.5% today. So some of the names that maybe you would think, hey, they might be flat or weaker today, and they're actually solidly green. I mean, Home Depot's up 2.5% here. Yeah, 2.5%. Yeah, and then SQQ. So take a look at SQQ. I mean, this above the upper Bollinger Band, but you take a look. I mean, I was actually looking at the 50 strikes. So definitely one of those ETFs that I might look to get in if as a hedge if we do have some more shenanigans later in the week. And last but not least, I'll finish it off my last favorite, Roku. I almost got these in lieu of doing the Baidu strikes. Tough to find a risk reward. I was looking for this week, and then I'm like, oh, next week 85s. I'll probably just sit on my hands, see if there's any follow through tomorrow, but here it is. Tried to break through 71, couldn't do it. Like it's done it 3 times today, and then here we are. It's right at $70 again. It's just not. I don't know if it's going to need another kick, but it seems like it's had kicks over the last week or two with analysts. Positive analysts, you had Needham, was it Bank of America? I think came out $100 price target last week or the week before. So anyway, that's it, folks. Let's have a great day. 30 minutes to close. I'll be back. Rock and roll.